Well, my friends, welcome to the Financial Prophet. I have a very special show planned for you today. Now, we're going to discuss possibly the most controversial company in history, which is also my favorite company, Tesla, and why its stock could potentially 5 to 10x in the next few years by around 2030 in my view. Now, before we dive into the numbers and my most recent analysis, I would like to provide some background information about my personal history with Tesla and its stock. I remember it as if it was yesterday. Tesla going public, I mean, even though it's been about 15 years now. While I didn't buy Tesla around its IPO, primarily because of the ultra-negative news coverage right off the bat, I began investing in Tesla stock in October of 2013. Now, split adjusted, Tesla stock was at about $10 then. So I have made about a 3,000% return on that part of my Tesla stake. I've traded Tesla around the peaks and troughs over the years, mostly successfully, which may have contributed to my overall return on my Tesla position, reaching approximately 5,000% over the 12 years I've invested in the company's stock. In 2017, I wrote my first article about Tesla, which focused on the company's potential to become a trillion-dollar enterprise, despite its market cap being only around $50 billion at the time. That article received a lot of criticism from Tesla skeptics. And, reading some comments on my most recent article, it seems that not much has changed. Still, Tesla also falls into my top 5 stock investments of all time. And we're not here to talk about the past. Let us discuss the future and why, despite the enormous skepticism from the Tesla haters, Tesla stock could go much, much higher from here, and you should probably not be shorting this stock. Now, before we start with the analysis, just a quick disclaimer. Anything I say in this video is strictly my opinion, and I'm not giving any sort of financial advice, nor am I recommending the sale or purchase of any securities, including Tesla stock. I discussed why I increased my Tesla position around the lows in March and April, as well as on the massive early June drop when CEO Elon Musk's Twitter storm erupted, which included the now infamous and since deleted Jeffrey Epstein tweet. Now, maybe you're wondering why I'm accumulating Tesla stock when Elon Musk exhibits, what could arguably be characterized as erratic behavior. There's a lot of controversy about Tesla's sales declining recently, and the company has always been a very significant battleground stock. So I believe in the company and its technologies, in Elon Musk, and I think that it is one of the most innovative companies ever, and Tesla has enormous potential ahead. Also, I feel that Tesla stock hit a long-term bottom around the 220-200 support range, and due to numerous constructive fundamental factors like its market-leading position in electric vehicles, full self-driving FSD, robo-taxis, AI, robotics, energy, and more, Tesla stock could have enormous upside ahead. So let's look at Tesla's chart here. Now, do you remember when all those Teslas were literally burning? Well, due to that ultra bearish sentiment and other transitory factors, that unprecedented chaotic period very likely coincided with the bottom in Tesla stock. Technically, Tesla stock is in a very interesting place. It appears to be forming a long-term W-shaped bottom. We can also view this image as a bullish long-term inverse head and shoulders setup. Moreover, we have the 50-day moving average crossing over the 200-day moving average recently. This dynamic illustrates a bullish golden cross formation, which is also suggestive of a long-term bottoming process, which supports the likelihood of higher price action, especially in the intermediate and longer term. Now, while Tesla stock could potentially pull back to about the $300 to the $280 support range, it is not likely to fall much beyond that unless we have a considerable broad market correction. Now, in this sort of bearish case scenario, we could witness Tesla stock test around the $270 to $250 support range. And I just want everyone to be aware of that there is more downside potential in the near term for Tesla, but I don't believe that the market is going to allow Tesla to fall much below 270 and probably not below 250. So let's talk about Tesla's QT earnings beat and how it beat the estimates. So Tesla reported revenue of 22.49 billion for Q2, beating the consensus figure by 360 million. Normalized EPS came in at 40 cents, which was in line. Now, my estimates that I provided several weeks ago was for sales of 22.65 billion. So that's very close, only about a $160 million difference. And I predicted that the company would have an EPS of 44 cents a share instead of 40. And that's primarily because I factored in slightly lower operating expenses, which were higher than I expected in Q2. Now, while Tesla's automotive segment produced about the sales I anticipated, its operating costs were a bit higher than I thought. For instance, I thought that Tesla's automotive sales revenue would be about 15.6 billion, and that's without the tax credits, and Tesla delivered about 15.8 billion. So the company also utilized less tax credit revenue than I anticipated, which is very positive. Tesla utilized about 439 million versus my estimate of 700 million. So I view this as a very positive signal because this dynamic may illustrate that Tesla is slowly winding down its partial dependence on tax credit revenues, and therefore it should remain profitable once the EV tax credits are phased out, and it could even increase its profitability by generating more revenues from its higher margin businesses in the coming years. Moreover, I believe that Tesla could regain more momentum auto sales wise and could return to considerable growth in its automotive segment. Moreover, Tesla reaffirmed that it's on track to introduce its new lower cost EV in H2 2025. New vehicle could contribute considerable revenues to Tesla's top line next year, enabling it to surpass future revenues and EPS estimates. And also, I just want to make this point that we had this unprecedented period where Teslas were being firebombed and Tesla owners were being harassed, their cars were being keyed. Now that was all very unfortunate. And at the end of the day, consumers will return to Tesla because Tesla still has the best EV product on the market, in my opinion. And none of the Chinese companies like BYD or the EVs that Volkswagen makes or BMW or Ford or GM make come close to Tesla performance-wise, value-wise, technology-wise. So Tesla is still very much ahead of the market in EVs, and it still has the potential to considerably increase its market share in the EV car sales segment alone. So we're not even talking about all of its other future segments here. But let's talk about the future, because it's not all about selling cars anymore. Services and other revenues expanded very nicely to about 3.05 billion, which was a 16% quarter-over-quarter increase. Now, this was above my 2.9 billion estimate. However, Tesla's energy generation and storage business, its sales only rose slightly over its previous quarter. So the energy segment brought in about 2.79 billion in sales in Q2. This was slightly lower than my estimate of 3 billion. But this is explainable because due to the White House's harsh stance on solar and renewable energy in general, aside from the nuclear segment, it's a very challenging time for the entire alt energy industry now. Just look at companies like Enphase and SolarEdge. I believe SolarEdge is on the brink of bankruptcy. Enphase is in a better position, but all of these companies have been struggling, and Tesla's energy business has been doing much better than its competitors. So when the economy improves and perhaps we get a little bit more emphasis on solar and on alternative energies aside from nuclear, Tesla's energy business could boom and could become an enormous business. In fact, that this business alone could be worth around $200 billion right now. Let's talk about Tesla's profitability being better than expected, because there's a lot of noise that this wasn't a great quarter. that its profitability is declining, which is really nonsense. It's just what's happening is the company had higher than expected R&D and general selling, marketing, and administrative costs. So it's not like the company is becoming less profitable manufacturing wise. In fact, the complete opposite is the truth. Tesla produced a gross margin of 17.2% in Q2, which was a considerable improvement over last quarter's 16.3% gross margin. And it was slightly above my estimate of 17%. So 17.2 is a very good gross margin to post here. Now, if we exclude the tax credit revenue, Tesla's gross margin was 15.6%. Now I'm talking about its entire gross margin, not just its automotive sales segment. 15.6% is still relatively high, especially for a quote car company. Because look, for instance, Ford's recent gross margins have been around 8%. GM's roughly 12%. Yet Tesla's automotive sales segment gross margin, not including tax credits, was actually 17.2%. So it's much higher than the legacy automakers. What this illustrates is superior manufacturing efficiency over its competition. In addition, Tesla also posted a 284 million gain on its Bitcoin holdings, which is atypical for a quote car company. You know, it's really all about the ecosystem and Tesla's future. People often ask me, what is Tesla's FSD advantage? Why should it be the one to succeed and potentially corner the robotaxi market in the future? And why not Waymo or Uber or someone else? Well, it's because no one has the ecosystem or the technological advantages that Tesla does. First, Tesla utilizes its own proprietary technology and not LiDAR detectors like most other companies utilize. While this system is not perfected yet, I believe Tesla will iron out all of the kinks in time. For instance, Tesla can utilize higher resolution cameras, improve Neuralink capabilities, incorporate additional sensors, improve AI capabilities, and the company can do much, much more. You know, knowing Tesla, there's a very high probability that the company will be able to figure out solutions to its transitory FSD issues. Tesla could become the #1 player in this ultra lucrative and highly profitable robotaxi FSD space. And even Goldman Sachs thinks that Tesla has a significant leg up in this sector. So I'm definitely not alone in my view here. But here's how I view Tesla, and it's certainly not as a car stock. Think about it this way. Each Tesla vehicle is actually a robot on wheels. There could be about 5 million active Tesla vehicles globally now, and each one of them has numerous cameras. These cameras continuously collect and transmit data back to Tesla's enormous data center AI system and its supercomputer dojo. Tesla is also building thousands of robots this year, and it may produce around 50,000 units next year. I don't know about you, but I view this as a sort of iPhone moment, similar to the one I had in 2006, when I saw Apple coming out with a superior, market-leading, revolutionary product, the iPhone. I just knew that in several years, essentially everyone would have one of these. I bought Apple stock for the long term in 2006, and the rest, as they say, is history. Now, I have a similar feeling regarding Tesla's Optimus robot. It seems so much more refined than anything the competition has to offer. Moreover, it looks amazing in my opinion, as many, quote, competing robots have wires and they have other aesthetic issues. In other words, the Optimus Bot reminds me very much of the iPhone in 2006. Now, I understand that the robot is a much more expensive product, but that doesn't mean that between now and 2030, many families and businesses won't own one. Elon Musk and others believe that the humanoid robot segment will grow into a multi-trillion-dollar business eventually, and Tesla could dominate in this space as well. Now, I'll admit, Elon has been a little optimistic about some timelines, But I've learned not to doubt demand too much, especially when it comes to highly capable and applicable future technologies like robots. Tesla's aim to produce about 1 million robots a year by 2030. Therefore, we approximate an average selling price of $25,000 for each robot segment could bring in an additional $25 billion in annual sales for Tesla. I just want to discuss some short selling risks to consider for anyone who is short Tesla or for anyone who is considering to short this revolutionary company with a arguably genius CEO. While I have nothing against shorting stocks, for short-term profits, Tesla is not a stock I would short in the intermediate and long term. I've never thought that it was a wise idea to short companies that are involved in developing and implementing revolutionary products and technologies. So I just think that anyone who is shorting Tesla longer term with put options or any other instruments because of its seemingly high valuation, they could be making a mistake. I only mention this because I don't want to see more people lose even more money betting against Tesla, as I've been witnessing this dynamic for over 10 years now. So let's talk about where Tesla stock could go longer term. Now, I have my price target chart here with other estimates, and as you can see, I have revenues increasing from about 112 billion in 2025 to roughly 325 billion by 2030. We could see revenue growth expanding in future years as the company focuses more on its robotaxi FSD business, increases its automotive sales, and also sells more robots, and also moves into more semi-truck sales, and the energy business should continue doing really well. So we could see a higher growth than 20-25%, and in a bullish case scenario we could even see 30+% sales growth in some years between now and 2030. Now, earnings per share wise, I believe we're at a rock bottom year in 2025, and we could see about $2.50 in EPS this year. However, in future years, we're likely to see considerable EPS growth. For instance, we could see about 90% EPS growth in 2026, and I'm being a little bit cautious with the 33% EPS growth in 2027. I think Tesla can outperform that, and we could see on average about a 50 EPS growth rate in the next 4 to 5 years. Forward P ratio, we're likely to continue to see a relatively high forward P ratio because Tesla has many futuristic businesses that could either dominate markets or play very significant roles in major markets. And there are smaller companies like a Rocket Lab, energy companies, and robotics companies that will probably not be anywhere near as successful as Tesla, but their stocks are trading at multi-billion-dollar valuations. Tesla has all of these different businesses. How much could all of these businesses be worth separately? And it's probably much higher than its current $1 trillion valuation. Now, I just want to say that I'm keeping my intermediate and longer term estimates the same as in my previous analysis for now. I see no need to change them at this point. However, I could adjust estimates higher as more clarity materializes concerning Tesla's new vehicle, robotaxi, and FSD monetization growth, and potential improvements in general efficiencies and automotive sales. Therefore, these are my lower to base case scenario projections. In a more bullish case outcome, Tesla could achieve market dominance in FSD, robotaxis, electric vehicles, robotics, and perhaps most importantly, it can successfully integrate all of these moving parts into its highly advanced ecosystem, which is basically its moat. In such a scenario, I believe it is highly plausible that Tesla's stock could go much higher, and my 2030 price target range remains 2,500 to 3,000 for Tesla's stock. I want to thank you very much for watching my profit report about Tesla. I really hope that you enjoyed it. And more importantly, I hope that the knowledge you gain here helps you make more informed investment decisions in the future. I would also greatly appreciate hearing your comments, so please join the conversation in the comment section below. Now, if you enjoyed my video, please click like, share, and subscribe to my channel so I can continue creating these highly informative and potentially very profitable videos. You can also join the Financial Profit, my exclusive investment community, which is seeking Alpha's #1 service for proven portfolio profits. So don't hesitate to join our incredible investment community now. Thank you very much for watching. See you next time, and have an amazing day.